about levels, markets, stocks, all that continues. We've got Gautam Shah now joining us. He is Chief Strategist at Goldilocks Premium Research. Gautam, hi. Looking at your latest report, it says new highs is quite a feat, but going by what you've, put out in the report, you're talking about the Nifty Bank and IT sector batting for the bulls, and therefore it becomes easy for the Nifty to rally. So given the kind of rally that we have seen at 21,700 levels, is that going to only sustain as per your analysis?
Good morning. Well, when we put out the message that new highs being quite a feat, we meant after what happened last Wednesday, because there was so much talk and chatter around the market fall of a single day. And this really reminds me to what happened in that 2003, 2007 bull market, where we did see these knee-jerk reactions from time to time, but it only helped the market set up. And the manner in which the indices have come back in the last 4 trading sessions, it just tells you that the bulls are still in control. Momentum is strong. The participation has been excellent, and support levels have been respected all along. We put out that number of 20,900 based on moving average studies, and quite amazingly, the index moved up from there. Now, as things stand, things are a little euphoric. I think we have reached a phase of exuberance, and there is this feeling in the marketplace that this will continue forever. But I do believe that as we get into the month of January, be prepared for some volatility, some weakness, some correction. But I think it's going to be rotational in nature. On the Nifty itself, our working target is about 22,300. So as we get close to that number, I think it might make sense to take some profits off the table and maybe work with a trailing stop loss of 21,200, or even if somebody's comfortable, 20,900. So while the index might not be so relevant right now, I think there are opportunities in a lot of sectors: banks, IT, pharma, metals, infra, power. I think that's where one should focus on without looking at the index much.
I just wanted to scratch that point further. When you say 22,300, Gautam, what's the timeline of it? And there's this raging debate in our studio how January is going to pan out, because historically it hasn't been a great month. It's been usually negative. But for now, the momentum that we are seeing suggests something different.
Well, as you rightly pointed out, I think seasonal triggers have worked well. If you look at the track record of the last 25 years, November and December are generally positive months, and it's played out beautifully in the last 7 weeks. And as we are in the last week of December, this is usually the feel-good time. This is usually the time when FIs are on a holiday. But as we get into the month of January, and with earnings and with a lot more discounting, I'm pretty sure that it's going to be volatile, and January is not likely to be how November and December have been. So I think keeping that in mind and keeping the breadth triggers in mind, just to put a statistic, 92% of the stocks in the NSE 500 are trading above the 50-day moving average. When you have such stats, it just tells you that the market is indeed very, very overbought. So while this might continue for another 2, 3, 4 days, but I think starting the 7th, 8th, 10th of January, you will definitely see some pullback. So stay prepared. But if you are in the right stocks, in the right themes, because this is a market where one theme picks up, like look at what has happened to chemicals. It's a basket that has come back so strongly in the last 1 week, and we see a big opportunity in chemicals in the next 3 to 6 months. So just stay in the right themes without really bothering about the index.
Interesting point you made, chemicals. I mean, we were speaking to Rashesh Gogri, chairman of Aarti Industries, just before talking to you, and he was also saying next 2 to 3 quarters is where he's expecting things to rebound, destocking to happen internationally, and margins come back. So they have not changed their capex guidance or revenue guidance despite of what has happened in the last 2 years. And now you are mirroring the same sentiment on the leader stocks at least, but basket is the right way. What would you do in metal stocks, Gautam? Because they have also come back with dollar index cracking, steel, aluminum, everything is rallying right now very nicely. Would you back any of those ideas in the metals? How would you approach metals?
We would actually approach it very strongly. Metals have seen a sort of a pendulum or a seesaw kind of a move the whole of this year. There have been phases of strength, and then there were phases of a lot of weakness, which scared people with their performance. But this comeback of the last 1 month looks very genuine, and we have actually turned quite positive on metals. JSW Steel has been on top of of our radar for a long time. And we particularly like Nalco. I think it's a stock that we recommended, and we feel it can do bigger things even from current levels. And mind you, these are stocks which are coming out of 3-6 months of consolidation. For that matter, even a Steel Authority of India, what a smart move it has seen in the last 2 to 3 weeks. And there is a lot of catch up. You compare this with some other PSU names, you'll see that once they ended their consolidation, the move was very large. I mean, case in point being Coal India, NTPC, Power Grid. Something similar might happen to a stock like SAIL. So metals is something that we are very positive on. Tata Steel also, I think, offers a great opportunity, limited risk of about 10 rupees on the downside, and upside potential of 30 to 50 rupees. So that's a good 1:3 risk reward to play with in many of the metal stocks.
Gautam, what about the banking index? Was it rank underperformer? This series, it's managed to turn its head around. Do you expect this momentum to continue? And if yes, what are the constituents of it which you think will drive the rally now?
Did you ask me about the IT index?
Banks.
Banks. Okay, so the screen always lights up when the banks do well. I think that's something that we've seen repeatedly in the last 1 year. Bank Nifty underperformance ended a month back. That's when we actually turned bearish after being cautious on it for about 3 months. Our working target was 48,000. We are right there. I don't think this Bank Nifty rally is going to end anytime soon. We are looking at an eventual target of about 49,100, and possibly at some point of time in the first quarter of next year, even a 50,000. Why I say this is because the top private bank, which is SDFC, is looking solid on the charts after a long time. Hopefully, it moves to 1800 plus in the current move. And the top public bank, which is SBI, has a phenomenal setup. In fact, it's one of our high conviction buys at these levels. A couple of years back, we actually found out ITC for our clients. Then we spoke about Coal India. And now our high conviction bet is SBI. I think it can do something special in 2024 if you want to just pick one stock among the large caps. So given this view, I think the banking as a space should do well, and that should keep the entire market safe. If the banks are strong, the Nifty is strong. If the Nifty is strong, generally the entire market is steady.
Gautam, let's dissect some of the other specials on the kind of stocks in the broader market which are making some big moves and not very wide representation. For example, battery stocks have started coming back. Amar Raja, Exide, just 2 battery stocks, such a big auto market, plus the export opportunity. Look at how lubricant stocks have come back. Only 2 pure play lubricant stocks, such a big auto market, and plus lubricants have their application beyond auto as well. Have you had a chance to look at some of these on the charts?
Ajay, that's exactly the point, that you have to look at things as themes. And I think we've actually seen auto components as a major story. Auto ancillary and auto components, I think they've done very well as a basket. In fact, auto as an index continues to be very strong. Look at Tata Motors, look at Bajaj Auto. And I think auto components and this entire EV theme, which was so widely discussed a year back, is now coming in favor. And I think this trend will continue because many of these fundamentally strong underperformers of the last 1 year are now coming back, and that's exactly where we are picking our names. So just to put it broadly, auto components looks great. I think there is more upside potential. And construction material, we actually put out a custom index for our clients last week. So while real estate is already done well, but now the construction material index, look at Green Cap Panel, Kajaria, ceramics, all of these stocks have a very good setup. So you have to be very stock specific in this market, but just ensure that be in stocks which have high institutional interest, because there's so much money coming into mid caps and small caps, 8,000 crores every month. I think that will propel many of these stocks higher, and they will get re-rated along the way.
Okay, that's interesting. What would be your outlook then when it comes to some of the, niche players, maybe stocks related to the fertilizer sector? Sugar has seen an interesting up move, agri or rural related. Is there any trends or any stock specific calls here?
A lot of opportunities. I think fertilizer has been on top of our list. We in fact covered Chambal Fertilizer. We have been batting for GNFC. We recently covered Deepak Fertilizer, and I see all of these stocks doing well. Again, if you look at the numbers, it's all excellent, fundamentally, quite cheap as well, under-owned to a certain extent, and they're all now breaking out relative to the Nifty. So fertilizer, we continue to like. Sugar has been volatile given the government news flow from the government, from time to time. It's not been able to pick up, barring a few stocks. So I'm not very sure there. But I think some other names which we like is cement. I mean, look at an Ultratech, Ramco Cement. They've all seen massive moves, and I think the best is yet to come. So cement and power and infra, I think, are basically proxies to the India story. And not to forget consumption. I mean, consumption of services and consumption of products, as an India story, has come back very strongly in the last 1 month. Many stocks have made a strong comeback, and I think this is also going to flourish in the months to come.
Gautam, your view on the power stocks? I know at one point of time you were quite bullish on Inox Wind. What would be your call on that one now? And even the other power names, the power financiers, for instance, had seen quite a bit of run up. Would you now recommend people to book profits and churn into other sectors, or just continue holding?
That's exactly the view. We are recommending people to take profits in stocks that have given you massive returns in the last 6 months. So Inox Wind for me is at a point where one should take profits. We are just going a little safe and conservative into January. We want to be in the conservative names. Even if we make less return, it's okay. Everybody's running after returns on a day-to-day basis. But we are just going a little low-key into the month of January because I think the risks are slightly higher. But on an overall basis, power as a space clearly is buzzing with activity fundamentally and technically. We continue to like Tata Power, the big boy. We continue to like a JSW Energy, CESC, which has made such a good comeback. But the other names that you alluded to, I think profit booking can clearly be done.
Top recommendation in the pharma pack right now, because that too is seeing quite a bit of breakout of late.
Pharma looks great. I think it was in a phase of underperformance for about 6 months. Thereafter, the moves have been excellent. Some of the biggest underperforming stocks of the last 2 years have given you the best returns in the last 2 months. And this is going to continue. Our working target is about 70,000 to 17,500 on the NSE Pharma Index. And I think the going is only going to get better. Once again, as I pointed out, go defensive in January. So IT and pharma are right on top of our list, and I think both will outperform. So even in the pharma space, Dr. Reddy's, Divi's Lab, Zydus Life, Cipla, all have excellent setups, and even the mid-cap pharma stocks, stocks like Solara, stocks like Strides Pharma, they've all done well in the recent past, and I think there is more upside potential there.
Gautam, before we let you go, you're part of the market, and this market infra theme is doing very well. The latest stocks to latch on to this are the wealth management stocks. Nuvama, of course, it's a recent listing, but some of the others, Anand Rathi Wealth has been around, 361 has come back. BSC is doing any of these stocks, which are about a dozen now from the market infra theme, which look good to you?
Well, financial services is a big theme, given the rise in SIP numbers, given the fact that a larger part of the population is now into the financial markets, and thankfully so. We wish that something like this happened 20 years back, and it's now happening. Because of that, I think this entire financial services theme has picked up substantially. But don't paint every stock with the same brush, because I think when a correction happens, like what happened last Wednesday, the men will be separated from the boys. I still want to stay with the bigger names, the bigger themes. I still like CDSL. I think it can do wonders over a 2 to 3 year period. We still like MCX, which is also a proxy to the financial services theme. The wealth management stocks that you mentioned, yes, they've done well. They've run up a lot. Numbers are very good. But I think the risk reward is not justified to be making serious commitments at these levels. So again, the key takeaway is stay with the big boys, stay with the industry leaders and challengers as we get into the first quarter of next year.
Gautam, you said SBI could do some special thing in the next year. Which is the other top bet for 2024 if you had to pick one?
Well, I think a lot of new age businesses have done quite well. So I think Zomato has been on our list the whole of this year, and it's delivered supernormal returns for us. I think another stock which looks very interesting is Nazara Tech. I think a lot of the negatives are now in the price, and the stock really has the potential to do something special. So Nazara has been on our high conviction list for a while now. And I want to add to it chemicals. We started the conversation with the chemical space, Aarti Industries, Deepak Nitrate, Gujarat Fluoro, SRF, alkali amines. I think all of these stocks have very limited downside and large upside potential. And I'm told that fundamental triggers will also pick up over the next couple of quarters. So, risk reward is something that your viewers need to keep in mind while they commit at a market which is at 21,500 or 21,700.
Okay, Gautam, on that note, we let you go. Appreciate you joining us and have a very happy and strong 2024 as well. This year has been rather kind for a lot of market participants. Hopefully that continues in 2024 as well. Okay, time to take